Welcome back, my fellow Gevonians. I must start by saying it's really an exciting time for all of us investors right now. Gevo's long-awaited DOE loan is finally official. After months of anticipation, the U.S. Department of Energy has extended a $1.46 billion loan guarantee to support Gevo's Net Zero 1 project. And as many of you know, Gevo stock has skyrocketed over the past few months, hitting a 52-week high with a several 100% increase since August. The flurry of positive news has positioned Gevo as a leader among its competitors in the sustainable aviation fuel sector. On a personal note, I have increased my position in Gevo over the past month, driven by these incredible developments. My earlier doubts are gone.
So you're telling me there's a chance?
And I'm also more confident in the company's future than ever. But before we dive deeper into the DOE loan approval, I just want to remind you to like and subscribe to my channel if you appreciate the work I put into making these videos. Now, let's get rolling. When Gevo first announced plans to build the Net Zero 1 facility in early 2021, we, the investors who have been following the company since then, experienced a roller coaster of emotions, swinging between hope and despair. While we never doubted the viability of their technology, the financing was a major question mark, especially when Gevo decided to expand NZ1's capacity back in 2022, which significantly raised the price tag and delayed the project. The DOE loan was a long, drawn-out process that delayed construction by another year, beyond what was initially communicated. And though we hoped for a positive outcome, the company stood at a critical crossroads. A negative decision would have severely damaged Gevo's reputation and shattered investor confidence permanently. Many of us, including myself, were hesitant to press the buy button, even when the stock price was at 50 cents this summer, despite the enticing price. The fear of a collapse in confidence weighed heavy on, I think, all of us. Adding to the uncertainty, the ongoing debates around the construction of the Summit carbon pipeline further clouded the project. And just days ago, South Dakota, where NZ1 is located, voted against the pipeline proposal. However, Gevo's leadership didn't just sit on the sidelines biting their nails. Instead, they acted proactive and decisively, strategically leveraging their balance sheet to solve the problem by acquiring Red Trail Energy and their carbon capture and sequestration facility. This move was arguably the most important and smartest decision Gevo's management, led by Pat Gruber, has ever made. It restored investor confidence and renewed faith in the leadership team. The acquisition of Red Trail was well-timed, and it likely played a pivotal role in securing the DOE loan approval. Just over a month later, we received the fantastic news. The DOE loan, amounting to $1.46 billion, not only solves the funding issue for NZ1, but also highlights three critical factors. 1. Carbon capture and sequestration. The Red Trail acquisition, with its CCS capabilities, allows Gevo to capture and store up to 1 million tons of CO2 per year. This is a vital part of Gevo's vision to produce carbon-negative fuels, reinforcing its commitment to decarbonizing aviation. 2. Financial flexibility and scaling. The loan accelerates the construction of NZ1, enabling Gevo to scale production faster than anticipated. Gevo is now better positioned to meet the growing demand for sustainable aviation fuel, which is crucial as airlines push to meet emissions targets. 3. Restored investor confidence. Beyond financing, the DOE loan signals strong government support for Gevo's renewable energy initiatives. It's not just a cash injection, it's a validation of Gevo's technology and future growth prospects. The DOE's confidence in Gevo's ability to decarbonize aviation fuel is a clear indicator of the company's growing reputation in the industry. But why was the loan amount higher? The loan initially requested was $950 million, but the final figure approved was $1.46 billion, a substantial increase of over $500 million. So, how come? There are a few possible explanations. Increased project scope. Gevo may have expanded the scope of the Net Zero 1 project, especially with the acquisition of Red Trail Energy, the inclusion of CCS technology, and the integration of additional renewable energy sources likely pushed up the overall project's costs. Inflation and construction delays. Given the inflationary pressures and supply chain issues experienced globally, the cost of building such an innovative facility has likely risen over time. The DOE may have factored in these realities and adjusted the loan amount accordingly. Stronger financial backing. The DOE's willingness to provide more funding could indicate a higher level of confidence in the success and scalability of NZ1. The extra capital ensures Gevo can fully realize its visions without cutting corners or delaying progress. As we look ahead, it's clear that Gevo's future is brighter than ever. With the combination of the DOE loan and the upcoming 45C tax credit, Gevo is in a prime position to transition from a speculative penny stock to a true leader in the sustainable fuels market. The stars are aligning, my friends, and Gevo is on track to become one of the dominant players in the SAF industry. With these latest developments, they are setting the stage for massive growth. I'm personally excited to see what the future holds, especially with the upcoming quarterly report on November the 7th. And as always, keep in mind, this video is for informational and entertainment purposes only, and it's not financial advice. If you found this analysis helpful, please hit the like button and subscribe to my channel, and help me reach the next milestone. We have now surpassed 500 subscribers, and I'm so grateful for your support. Well, that's all I had for now. Until next time, bye bye.